Can you just give us a quick rundown on what you think has caused this? Really, it's a real influx of something that they've been around, but what caused it to become so popular, Mark, in your view? And what do M&A guys think of it? I bet you don't like it that much, huh?
No, actually, that's not true, Joe. It's there have been $83 billion worth of de-SPACing transactions or M&A transactions in effect. I think that you've got highly volatile markets. In a SPAC transaction, you get to put projections out. The shareholders do have some serious protections around it. They got a shareholder vote to approve the transaction. They got redemption rights. So in effect, it's the combination of that. And a more prominent group of sponsors, more institutional equity, broader group range of institutional equity, and even in some of these larger transactions where pipe deals come in to help supplement it. I think it's, in some respects the product is sort of matured in a way. But I think it doesn't hurt the M&A market in that regard because they're still ultimately they got to buy companies.
Right. Do you get the feeling? What do you think why do you think it gets a sort of a negative rap or negative connotation at this point?
Look, you hear things about the size of the promotes. You hear things, that sort of stuff. But I think, look, a lot of that. I'm a big believer. You've got a sophisticated investor base. It's about disclosure. This is not, sort of an unsophisticated investor coming into these things. And as long as the disclosure is appropriate, which, we know Jay Clayton at the SEC is paying attention to, I think it's you got a sophisticated market of buyers and sellers. So I think it's okay. It doesn't really trouble me in some of the disclosure we've seen. And as I say, with the protections to investors, as I mentioned, redemption rights and the shareholder vote piece, I think it's, at the back end, if they don't like the deal, they can get out or they can vote it down.
The amount of Fed action and zero interest rates and the global milieu that we find ourselves in, and we're seeing a lot of dislocations from previous markets. You don't think that this is part of a manifestation of that and maybe representative of some irrational exuberance overall?
Look, it's liquidity is obviously, and the both monetary and fiscal policy has done a lot to, as it were, prop up these markets. I don't think any of us is disputing that. We do correlate to the stock market or the public markets, M&A volumes with a lag, typically about 6 months. So yes, Joe, there's a real risk of that. I think, but I don't know that I think that's generally true for the uptick in M&A as well as the SPAC product, as well as the IPO product. So I don't really view them as, as a SPAC product differentiated in any way. I think we're in an environment, the shocking thing to us is, given, as you mentioned at the top of the show, the recovery in volumes. We're running in the last 4 months on a monthly run rate basis in M&A at 40% higher monthly run rate than the first 3 months of the year pre-COVID. So yeah, there's something going on here, particularly if you look at, how the real economy is doing. On the other hand, in spite of China trade, in spite of an election, it's as busy as I've seen it in quite some time.